Alright, so here we go. As usual, a Saturday evening for our masterclass mentoring session. It's been the end of the month of June, end of the quarter as well. So we'll take a look at the Nifty and the sectors slightly from a wider perspective. We'll take a look at the monthly chart also, and that's why I have kept the monthly, the weekly as well as the daily time frame open in front of us. The usual SMI, the usual short-term RSI and the ADR indicators to help us understand the behavior of the market. Quickly starting with the Nifty, it was a dramatic month in terms of monthly range, huge, way beyond 2 standard deviation, and we know that's primarily because of the 2nd of June and the 4th or 3rd of June and the 4th of June's price behavior, election results, and so it took a huge expansion to the range. Forgetting the range for some time, the underlying trend, the underlying momentum seems to be fine. Of course, stretched, it had managed this monthly breakout and it's been holding well. So there's no particular sign of slowdown on the monthly time frame. Weekly, if you remember, we were stuck in a situation where the underlying momentum from the SMI was slowing down, which led to this choppy range bound market, and finally we had a breakout, lot of range action, and then follow through successful breakout that we have enjoyed over the last 3 days. Pretty nice, pretty clean. Yes, it is a bit stretched, but as I always tell everyone, that do not look into overbought, short-term overbought readings in a predominantly uptrend. It makes no sense. So yes, it's been going up for 1, 2, 3, 4, 5, 6 weeks now. 1, 2, 3, 4, 5, 6, 7 months now. And of course, for the last, I think 2 or 3 weeks, predominantly green. So law of averages might catch up and it might slow down. No sign of reversal yet. So it is right to keep a bullish view on the market. You can add a cautiously bullish view that if it comes down, then you can look to add more. So Nifty is pretty clean. Nifty is not standing out and giving us any particular strong signal of reversal. Mid caps also, this is the CNX mid cap, also reflects that kind of an outside bar. The daily chart over here is giving you a rising channel kind of a behavior, which needs to have an upside breakout. These tend to reverse also. So we'll keep that in mind, but CNX Nifty, CNX mid cap Nifty also looks pretty clean across all the 3 time frames. Small cap, nothing different. Small cap and mid caps are kind of sharing the similar kind of a behavior of a small little congestion, consolidation. I don't know whether this is a distribution. There were signs of contrarian behavior up here from both the small cap, especially the small cap. We have not seen anything from the price yet, but what I can say is 18K on the downside is your short-term breakout level. A fall of that might confirm this as a top. So we have a fractal high over here at 18,400. So it's more about 18,400 and 18K for the small cap. Keep an eye on the top 10, 15 small cap stocks. If in case 18K breaks, you probably have a nice ride on the downside. Now, before we go to the sectoral charts, I would like to take a look at the RRG graphs on stockcharts.com. And first, I'm going to take a look at from the monthly point of view, right? I'm going to reduce the tail length to 1 just to quickly sort it out and figure out which were the biggest price gainers. Simply put, just in terms of price, nothing to do with RRG or its tail. So CNX IT was last week's biggest gainer. And we've been talking about CNX IT for weeks after week, and we're gonna come to that. All the sectoral indices over here were negative. Metal was the least. So this is an erstwhile leader. Probably we are getting some slowdown. Apart from that, pretty strong gains across the board, right? So there's not much of a problem. Your CNX 500 is around 7%. And so if you have the broader markets at 7%, it's a pretty good month to close. Now let's just kind of come back to our usual drill, that is from the weekly point of view, or should I say we just finished the 6th month, right? Let's check from a calendar point of view the last 6 months. I'm just curious. Last 6 months, I'm just looking from a calendar point of view, okay? Media is struggling, FMCG is struggling, IT is picking up. From the strugglers, from the ones which are pretty low, we can see IT is picking up. Bank Nifty is slowing down, but we have seen a recent phenomenal move from the Bank Nifty. And the gainers would be your Realty, Auto, and this is not much of a surprise, so not much takeaway. We'll go back to our usual drill of the weekly from a, let me update this. This is better. And let's make it 12 weeks, around a quarter. So we just finished a quarter also. Let's fit it. And we are good to go. So now let me sort in terms of tail. Let's sort in terms of tail and start with the first quadrant, which is the leading quadrant. How's auto behaving? Let me just try and increase the size of our quadrants. Leading quadrant, auto wiggling down. It's losing a bit of vertical positioning, which means the momentum of the relative strength might be slowing down. Let's check. Let's corroborate this with our usual sectoral chart. Let me sort this and CNX auto. You cannot ask for any better chart than this from the monthly point of view. Our weekly chart has some bit of a sign of momentum slowdown. We call this a sign of momentum slowdown. It may lead to continuation. It may lead to reversal. In the past, it has only led to further continuations. But we need to be careful. They lead to good reversals also. If the weekly is showing a bit of a slowdown, does it reflect in the daily? Is it reflecting on the daily chart? And we can see that the short-term momentum and trend has got synced on the downside for us, the way we read this, followed by a pullback. So for any short-term momentum trader, you might have an opportunity. This is essentially a short-term make or break bar. Friday's range, CNX auto, break below the low, you can expect some downside. Break above the high, you can expect an upside. I can see a bit of a classical divergence playing out. I can call them, in fact, I've started rephrasing these divergences as reversal divergence and continuation divergence. It makes sense. It's useful. So a bit of a short-term reversal divergence kicking in here. Let's see. So keep an eye on the auto. I'm going to list it out here. So auto's giving us some sign of momentum slowdown, and there can be a weakness coming in. It's kind of a short-term make or break. Next in line is the Realty, and you can see how the Realty index has moved from the weakening quadrant and gained vertical distance to the leading quadrant. Realty in terms of the chart, of course, there will be no change. Very strong monthly charts, a bit of a hike and slowdown signal. There is a sync of our short-term trend and momentum on the daily time frame, followed by a pullback bar. Friday's range is going to be make or break, just like the auto discussion that we had. I think Realty can be an interesting one. Move beyond Friday's high with the recent lows can give us a possibility of a retest of the high. Because of the fact that we have a sync of the trend and momentum, we will be essentially looking for a breakdown. That is, I think breakdown is a very strong word in these market conditions, a slip on the downside. So that's Realty. Next in the line in terms of the strong sectors is metal, and as you can see, metals have been cooling off vertically, which means that it should be a strong sector. And the good thing about stock charts is if I just hover my cursor close to the name of the sector, I get a bit of a small little pop-up of that chart. I'll try and inculcate more of this software in our daily uses if it's possible. So coming to metals, I think we should get a feel from the actual chart that it's kind of going sideways or it's losing steam. Monthly charts don't say anything like that, but the weekly, yes. Anyone who has just covered my recent event on contrarian setup, it's kind of right on our face. The contra behavior, the contra setup that I had discussed was right up there. Coming to the momentum part, the weekly charts is slowing down. Is there any sign of price confirming that weakness? Not yet. What will be this confirmation? A slip below a slip and close below last week's low confirms a possibility of further fall on the weekly chart. All right. So do not go too much bullish on the CNX metal right now. What about the daily chart? The daily also fits in our sync of trend, momentum, pullback. So what, this is the third sector, I think. Auto, realty, CNX metal all falling in the same situation. That is Friday's range breakout. It's interesting, right? Then comes small cap. We have discussed small cap, that below 18K it's going to be interesting. Then in the positive quadrant and just somewhere there, just not giving any kind of a strong move either vertically or horizontally, is consumer durables. Consumer durables had recently given us a very good move, and as you can see on the pop-up of the chart, it's kind of gone range bound. Those are the daily chart, but let's quickly open consumer durables for us. Again, what can I say? Means these kind of charts are the prettiest from a bullish point of view. In fact, the bullish charts are always the prettiest than the bearish charts because bearish markets are more volatile. Coming to the weekly, nothing much. It's a pretty strong chart. No sign of hike and slowdown either. Daily, what can I say? It's a beautiful rising wedge in a rising market, and if you've done any number of classes with me, you know that this brings back memories. Well, the daily chart is a sign of slowdown. Number one, okay, it's gone range bound. It's not like this. It's like sideways. So you've got a level. It's pattern traders will call it an ascending triangle and look for an ascending triangle breakout. Can be an ascending triangle. One can say a channel, or one can start to drop the. Say it looks more like a rising wedge. Whatever it is, it's a consolidation. It's consolidating. Whether it's a distribution or not, I would say that 38K on the downside, and this would be Tuesday's high. Last Tuesday's high, last Thursday's low. Important levels. We had a contra behavior playing out on the Wednesday's bar, based on Wednesday's bar, but Thursday, Friday it has not come off. So don't go bullish. Don't go bearish over here. Bullish possibility if any stocks stand out, then maybe yes. So consumer durables, there's not much of a takeaway. Mid cap we have discussed. Now coming to the improving quadrant, and we can see how improved in terms of CNX Media's momentum of relative strength has been. I'm not a big fan of these stocks, and I don't even have CNX Media. But now the fact that the RRG graph has stood out so well, why not? Let me make an exception and take a look at the CNX Media Index once. And now you know why I don't look at it. See this. This is the behavior of the monthly chart. You can see this. So this is the primary reason. I'll pass it. Now weekly charts looking really good. If you have any interest on CNX Media or any media stocks from a weekly time frames point of view, look for Sun TVs and Z Entertainments and all those names, and you probably will find a good pullback long trade. I'm not getting into the short-term readings of this pack. I'm not a big fan of media, so passing it. So it's improving. The weekly charts is the key. If you're interested, just evaluate the weekly chart. FMCG. Now this is one sector we've been talking about frequently over the last week or so, and monthly is okay-ish. Now monthly has been losing a bit of momentum for some time. In fact, the SMI that we are using here, the very histogram of SMI has been cooling off from here. Histogram of our SMI indicator. Struggling. The red HAGBs have not managed to pull the index down. On the other hand, the monthly charts have kind of gone up. Weekly, it's in a pretty decent structure, trend-wise, momentum-wise, and 2 bars of a pullback. We should get some kind of a reversal from the daily. The daily is not looking that bad. What I liked about the daily chart is the current lows and the previous highs kind of merge, which is a beautiful polarity playing out. We should get further upsides. With Fridays and Thursdays move, we have the direction picking up. So any kind of a A pullback will be an opportunity. Momentum, not yet. So generally when the market turns, momentum acts as a leading quadrant, as a leading factor. But in this case, direction is playing out better than that of our momentum readings. Bullish. FMCG will stay bullish. We'll look for some buying opportunity. So next is Bank Nifty, and if you take a look at the Bank Nifty, which is in the improved quadrant, it's losing a bit of vertical grounds. And if CNX Finance is right behind it, that is, it's also losing some vertical grounds in the improving quadrant. Bank Nifty is by far the most important sector to the overall markets. Exceptional monthly charts, pretty strong weekly charts, little careful daily chart. Now I have a classic contra behavior playing out on the Bank Nifty over here, but the direction is so strong across all the time frames. One should not expect a big fall. Friday's low is key, but not only is it key for it to break and stay below it, if it just breaks and bounces back, you're headed for further upsides. If you're thinking to go short on any of the banking names, if it gives you a contrarian setup, don't sit on those shorts for too long. All right. It does not, it's probably one of the strongest sectors which has performed over the last, I would say, three weeks, this particular month, the month of June. So Bank Nifty can be a contra short, but we need to be a little careful there. Oil and gas. This may hold a key from some kind of a nice top-down approach, sectors weakening, stocks weakening. So this sector can be one, because in terms of RRG behavior, it's very, very clean. No fancy volatility within the RRG readings. From a leading, it starts to lose momentum, loses certain further ground, slows down, now is losing relative strength. Means whatever it is gaining or losing, it is much lesser than that of the gains. So according to the Nifty gains, I don't know, we'll take a look at the oil and gas and the energy pack. The gains would have been relatively lesser. Though we have a huge move from none other than Reliance. But let's completely straight away go to CNX Energy. So now you get an idea why the RRG graph was behaving like this. It's because of this. After this kind of a move, wherein it would have outperformed left, right, center, the entire Nifty CNX 500 for the last quite a few weeks, I think this is close to 5 months or so, it's rising, but the rate of growth is not that great. That's why it has gone completely range bound. The daily chart has kind of become really choppy. So any kind of trades, short term, hit and run, 3-4 days, get out because it retraces and so on and so forth. Monthly, no problem, range expansion. Weekly, slant divergence. Daily, strong. Any kind of pullback will be a short term buy opportunity. Would like to stay away from it. It was giving us a synced reading over here. No, it wasn't synced here. I'm sorry. This was the elections. This is where it short term topped out after that short term divergence. So let's stay away from it. It doesn't have that clarity, direction clarity. It's not there. Quickly, the last two sectors, IT, gaining some relative strength momentum. Looks good, and I don't know, we've been talking about IT forever. You will remember this high and that same story we've been talking about, but it's now performing. The good thing is now performing. The good thing is even amongst the top stocks, TCS is something that we just added to our weekly portfolio, so that's also a good thing. Monthly momentum is there. Trend direction wise should pick up, should ideally pick up. It's got a beautiful continuation divergence on the monthly chart. We should see further upsides. On the daily time frame, it has given us a nice move, though at the first leg of the move was vertical after the election, I think, results and all that drama which was right here. The first move was vertical. Then it took a bit of a kind of an ascending triangular kind of a shape, a bit of a volatility, and now a clean move last week, especially a clean move coming in. So from a daily point of view, our momentum readings might get a little bit stretched as it starts to go back to these levels. These were its previous lows from where you had the first meaningful breakdown. I would say second meaningful breakdown. The first one was this. So might get a little tired, but structurally pretty good from the monthly and the weekly. So IT bullish. IT I would not look to go short. And then finally, healthcare. RRG has now gone into lagging. It's going up a little bit, but it's lagging, which means that it should be underperforming. But do we have any sign of a contrarian short or not? Let's take a look. Come to CNX Pharma. Starting with the monthly, clean, not a problem, not much to talk about over here. Coming to the weekly, this is where it gets really interesting because it had recently given us a breakout and then a throwback. Breakouts are prone to throwbacks, or breakouts are equally prone to breakout failures. Now, it's not a breakout failure yet. I won't call it a breakout failure yet. All throughout, our momentum indicator is slowing down, which is not merging with the direction. I will say that this is predominantly, the weekly chart is predominantly bullish. A move beyond last week's high, we should be looking for an upside. It will be selective, probably not across the board all the stocks. The daily has given us a decent move on Friday, and you can clearly see the degree of resistances, the zone that it had created on the daily time frame, kind of a throwback, and now it's trying to turn around. I would go bullish, 70% bullish and 30% bearish, but last week's range will be important. So overall, I think we've got a decent sectoral situation in place wherein auto, realty, bank Nifty move beyond last Friday's. I'm talking from a daily point of view. Last Friday's range can give us a short-term direction. Bank Nifty has a reversal divergence playing out there, so it can predominantly come on the downside. Realty and auto can be on either direction. Look for stocks within these sectors which can lead that move. Pharma, from a weekly point of view, is more bullish. From a daily point of view, also, we don't have a sync yet, but also it looks predominantly on the long side. Amongst the small cap, mid cap, small cap, keep an eye on this particular day's low, that's Thursday's low, if it leads to any kind of weakness. Overall, it's predominantly a bullish market. Markets have shown phenomenal strength, 24K taken care of. A lot of people will talk about much higher levels, and it's very relatively much more easier to predict upsides, but the important thing would be to foresee when the correction comes. So we have to keep our eyes open. So shut your ears and work with your eyes more. That's with the charts and not what others are talking about the markets, right? Okay, that's it for our sectoral analysis. Now we'll quickly update our sheet, take a look at your questions and look for some fresh opportunities for next week.